Just last week, the government announced an end of that huge influx of stimulus via the $300 billion Treasury repurchase program. Some folks are saying that this could have been at the root of that 7-month-long stocks and commodities mega rally that we saw. But without that free lunch in there, Jim, do you think that large institutions will be less inclined to participate in this dollar carry trade? And could this temporarily reverse the downtrend in the greenback?
Well, we have had gigantic amounts of money printed throughout the world by central banks. This time it's not just one or two central banks. I think this is the only time in recorded history where nearly every central bank has printed lots of money. It's been having a big effect on many asset classes, as you rightly point out. And unfortunately, I'm afraid that's part of the reason that stocks have gone up. Not so much that things are really basically better, just that the money had to go somewhere. And as people start to realize, oh my goodness, we have problems, we have serious problems, people are going to look back and say, well, maybe we should do something else with our money. And you do have governments already around the world starting to say, wait a minute, guys, this might lead to even worse problems down the road. And so you're starting to see some people pull back. Australia's done it, Norway's done it, Israel's done it. You may see other countries start to pull back, and I suspect we're in for a stock market correction.
You've mentioned recently that you think that over the next 10 years, the yellow metal could climb as high as $2,000. But, over the past 2 years, gold was capped at the $1,000 level. And now that it's closed decisively above that point for a few weeks, do you think it's just a matter of time before that powerful uptrend continues?
Oh, yes. You adjust the old high for inflation back in 1980 and 81, it should be over $2,000 an ounce now just to get back to its high. I'm quite sure it will get back to that kind of number. Maybe not this year, but certainly this decade. In the next 10 years or so. Little question about that. And if it happens, you're going to see even more people get excited, and then that may lead to the blowout phase, or the hysterical phase, the mania phase. I don't know. The mania phase may come at 3,000. Who knows what the number will be? But no, we have a long way to go with the price of gold and all commodities.
Well, I'd like to move on to the domestic economy. Federal Reserve Chairman Ben Bernanke says the nation is entering a jobless recovery. And although that sounds like a non sequitur, there have been several jobless recoveries over the past century. It seems that unemployment is likely to rise and continue to rise for another year, and that the Fed's hands will be tied here, that they'll have to keep rates low.
The Fed follows the market forces the Fed's hand. You're going to see the market causing interest rates to go higher somewhere along the line. We've had too much money printed. You have inflation, rising. It makes currency paper money suspect. So whether it's the Fed or Joe Smith or Sally Jones, interest rates are going to be going higher, and one should be aware of that.
You've also spoken publicly about the futility of owning government debt, and you've pointed out that, look at the GM bondholders. They thought they were invulnerable. Last year, they learned otherwise. Clearly, you see something that others are missing here.
We have inflation. It's going to get worse. It's going to get much worse. You're going to see interest rates going higher because during inflationary times, people have to protect themselves, and low interest rates is not a way to protect yourself during inflationary times. So, no, you're certainly going to see bonds going down. In other words, rates going up. It may sound radical, but that's the way the world has always worked. Nothing unusual about it. What surprises me is that people don't understand that.
Anything that you see unfolding in the global or domestic economy that you'd like to discuss?
Well, I'm sure we're going to have some currency crises in the next couple of years. We have these huge imbalances around the world. That's always worked its way out in the currency market, and you're going to see some currencies collapsing. If you're in the right currencies, of course, you'll protect yourself. It looks as though more and more, though, that the right currency, quote, is commodities, real assets, because all paper money around the world is suspect these days. People are printing it everywhere, so why would you want to own paper money in a time when all paper money is being debased? So I would suspect it's going to lead to a currency crisis or two or 6 or 18. I don't know where it's going to start. It could start in Ukraine or Argentina or the UK. It could start in the U.S. I know people who tell me that the U.S. is bound to default on its own debts sometime in the next 2 or 3 years. Now, I don't know. I haven't done enough homework yet, but there's certainly plenty of governments that are very, very, very overextended. So we're going to have some currency crises. I would urge everybody to learn about what's going on in the currency markets and therefore what's going on in the market for real assets, whether it's gold or cotton or natural gas or whatever, because that's going to be a very good way to protect yourself.
That's well said, Jim. And the rumor I'm hearing from some of the other folks in the industry, they're looking for currency crises right where you first pointed out, in Eastern Europe, the epicenter.
There will be massive problems in Central Europe. What normally happens with these things is some country none of us are thinking about starts having problem, and then that sort of snowballs. The next thing you know, everybody looks around and says, oh, how'd this happen? Because there's so many imbalances everywhere.
Well, you recently told folks publicly that your two girls don't own any stocks, especially American, but they do own commodities. Will Santa be depositing silver in the Christmas stockings this year?
I'm sure they'll get more silver and gold. Their father likes silver and gold, so I'm sure they'll get more of it, yes. No question about that.
If our listeners would like to follow your work more closely on the markets as well as commodities, could you please tell them how they can do so?
I don't have a blog or a newsletter or anything like that. There are my books that I've written, which give how the world's working. Apparently, I'm on YouTube whenever I suspect this will wind up on YouTube or on your website or something. That's about the only way I know.
Okay, Jim, I know you're busy today, so I want to thank you for joining us on the broadcast and wish you the very best.
My pleasure. Anytime. Thank you. Bye-bye.